Hey everybody, Boris Speaker for us. Welcome to the weekly technicals for the majors for euro dollar, dollar yen, and pound dollar, May 6th to May 10th, 2019. End of the week last week, we kind of came in dollar negative, and now as I'm actually making this video, which is really right in front of the Australian Open, we have a whole bunch of fresh news over the weekend that's going to definitely affect us on the Open. Very, very serious risk-off flows even before we open on the announcement the Trump administration is going to increase tariffs. That's certainly going to impact a lot of risk trades. We'll get into the COM dollars as well as the majors for right now. But for right now, basically the levels still essentially stay the same. Euro dollar at 113, 111. Dollar yen at 110, 112. And this is going to be a very, very important support level of 110. This whole new piece of news is really going to likely test that 110 level. And cable still holding at 130, 133. Very, very powerful rally on Friday, which I am a little bit skeptical of. We'll get into that in just a minute. Let's take a look at the calendar going forward this week. We have final data out of Germany and out of Europe on the manufacturing side. That should improve a little bit, essentially improve a little bit from the very, very poor prior readings. The idea here is that the worst is over. However, and this is the interesting point, this was under the assumption that the worst was over because the trade war between China and the U.S. was going to essentially come to some kind of an agreement. Now that we've reignited the trade war, Germany is a huge, huge drive-by casualty of that impact, and certainly going to have an impact as we go into the week. So we'll see how long the euro can hold on that onslaught. Although, frankly, so much of the negative news is already factored into the euro. I think it's going to be so far. I think it's going to likely to hold its levels for the time being. Into Wednesday, we don't have anything essentially on the major side until Wednesday with industrial production on the European side. Then Thursday, U.S. PPI data and U.S. Trade balance data. That's going to be critical because here we're actually bullish dollar on the assumption that inflation data has bumped up. But that's really on a headline basis. X-energy, that's going to be the big number, and if that number stays relatively muted, it's just going to be very little impact on the dollar, on the positive dollar, as the Fed seems to be very much in retreat now on the inflation numbers. And then Friday, the big event on the major side is going to be the U.S. CPI and basically UK GDP numbers, which are going to be really important, I think, and that's in some sense going to be interesting. Now, Kathy is bullish industrial production because trade balance and retail sales were much better. Actually, she's bullish, I think, the whole GBP complex here on the GDP data. So we'll see how that prints out. But I'm trying to see what is. She broke up the text here, so it's hard for me to see how she is. Yeah, I guess she's sort of making the argument that trade balance and retail sales were better in Q1. The market expected that maybe we're going to have a better Q1 GDP. It'll be interesting to see if that's indeed the case. That will provide a little bit of a boost to the pound at the end of the week. But we'll see if that really comes in as the number expected. But that's pretty much it. It's a very, very slight week as far as data set goes. It will be, I think, primarily dominated by political flows, and that's going to be very critical as we go forward. So let's take a look at the charts here and just see how everything is trading. And as you can see, by the way, already, now I'm getting quotes right now that are pre-quotes here, and you can see that the euro is already off like 35 points from its close on Friday. It closed around 12. Cable closed around 31.70, 31.80. Now it's trading 31.70. So you can see all of the pairs are really starting to indicate lower. Yen is really sharply lower by 40 pips. So clearly this whole new news on the fact that the Trump administration wants to increase tariffs on $200 billion worth of additional Chinese goods, certainly not very, very negative for risk. Here's the candles for the euro. And if you look at it technically, though, the one thing that's interesting is that, actually let me just zoom in just a little bit so you guys can see it. So far as we're holding these lows at 11, that still remains a relatively bullish construct here. However, obviously, fresh news here that can take the euro down below that really creates a continuation of this negative structure. The whole idea here is basically this week was supposed to have been kind of a trade back up to trend, maybe a recapture of 20 SMA as some of the rebalancing on the pro-dollar trade takes place. But of course, the political flows here are going to determine where things go as we go forward. Still, I think until and unless the euro breaks the 1100, it looks more supportive than it does negative, even on the technical basis. Cable, of course, had a massive, massive breakout, but cable is a notorious pair of 3 steps forward, 2 steps backwards kind of a trade, and it almost invites selling the tops, buying the bottoms on just an intermediate term basis. My whole point here is that there's a tremendous amount of resist here, the 33 against the 500 SMA, against the trend line basis here at around 33.50, and certainly some kind of a corrective move back down to the 30.50s is not outside of realm of reason. It still provides a positive overall flow for cable, as long as it stays above the 20 SMA, which at this point is around 30, basically 130. So cable definitely broke out to the upside, but it still remains underneath its long-term trend, and it tends to go into a very corrective mode after a breakout. So it's not at all unusual to see us come back down. I think at very minimum, cable very likely probably tests 3100 into the early morning flows today before it begins to resume its trend. The critical thing here, I think, is that it really needs to take out the 32s to truly establish a strong turn trade to the uptrend. And I wouldn't be buying this until and unless it hit 32s to the upside as a trade. And of course, the trade that's really looking very bearish these days, a big, big breakdown. So this is fascinating. After all this positive US data, highest yields in the world, blah, 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 so on and so forth, and yet we look horrible technically, and I think that's really the critical thing here. It's basically a complete rollover of the 1200. We broke below the 20 SMA now. We're still staying above the longer-term moving averages here in terms of the 20 is above the 500, and we're kind of holding at this pattern here. But the very, very important point here is this 110 level, because that's going to be, of course, the double bottom test here if they want to press it that hard. But if they press it beyond that, it really creates a much more negative, just a longer-term negative structure on the yen, where this goes from being essentially a pretty clean and clear uptrend since the beginning of the year, basically a series of higher lows and a pretty clean and clear uptrend, to, if it breaks the 110s now, a massive distribution top against which is going to be a tremendous amount of work to get it back up. So watch the price action the first couple of days here. This 110 will be critical to tell us at what the potential longer-term trend in dollar yen will be. That's how the week is starting out. Should be a lot of very exciting and interesting trade. Wish you guys the best luck, the best trading. Boris Schlossberg, over and out.